the stages. This is the same stage for stock market and everything. I think we're on the verge of breaking down in real estate market and also in the stock market. And we're kind of here in terms of this cycle chart. So up here means any investment you buy way up here, you've got peak, you've got maximum financial risk. You're paying a premium for real estate, you're paying a premium for stocks, all of that stuff. We need the market to have a contraction. It needs to find a bottom, and then it needs to start to turn up and give us that uptick. And we're a long ways from that, but we really need to wait as an investor to deploy all of that new capital.
Markets first. Now, medium-term outlook and then long-term outlook.
I like to look at the charts from a couple different perspectives. So I like to break the charts down to show visually what they're doing. Green is bullish, red is bearish. And we had a sell signal in the stock market. This was back in February and March to get out of long-term positions for equities. And really, this is a kind of a passive strategy. You just don't want to be holding equities. Naturally, they're going to be going lower. And when we look at a shorter term strategy during that time, you'll notice the last big sell-offs here have been a lot of red to the downside. There's more red than green. And that's what happens when you're in a bearish environment. If you look back here during bull market phase on the top chart, you'll notice when we've got nice strong trending on the daily chart down below, beautiful long trends, lots of money can be made. And so right now we're on a sell signal for the stock market. It is still a bearish play at this point. But what's interesting is we're actually potentially 1 or 2 days away from a buy signal in the stock market to actually get back in for a holiday rally, which you and I can touch on with the seasonality in a little bit here, because it is in favor for pretty much most commodities and equities here to start a rally going forward. So I'm bearish on it long term, but short term, we're actually looking ready, primed and ready for a rally.
I do want to talk about the seasonality aspect, but first I want to not delay talking about your main thesis here, which is that the stock markets could potentially see a decade-long bear market similar to what we saw post-2000 after the dot-com bust. Can you elaborate on that a little more?
Hedge fund manager came out on Market Watch and he kind of said what I was thinking, which is he thinks there's going to be a decade-long bear market in equities. It's maybe not a decade-long bear market, but we could have a very long time before the market recovers and gets back to where we are. So if we go back over here this is the NASDAQ. So we had this big tech bubble. It topped out over here. And then we had a multi-year bear market, which I think we could have a 2-3 year bear market, which is what happened here. And then it was dormant for a long time. And it actually took 17 years to break out again and get that money back. So that is a very long scenario. And we've had a huge blow off phase, all kinds of manipulation going on. We've had this first big sell-off on the NASDAQ chart and really on all indexes. But what's interesting is, if we take a look over here, there was this little pause, this bear flag move where it kind of traded sideways and higher. And that's a complacency type of move. And we had the initial big sell-off in the NASDAQ, which is where we are now. This is the initial big sell-off. And I think we could go into a sideways rally into the end of the year. And as the market kind of rebounds, and then eventually I think we're going to start a much bigger market correction that could take a lot longer. And the scenario that we had back over here back in 2000, this was a scenario very similar to if we look at the valuation of stocks and commodities. Here's the 2000 level where commodities were one of the most undervalued they had been compared to the stock market. And here we are now, we've been in that scenario and we're even more extreme than 2000s. Commodities are way oversold. Everybody's piled into stocks and real estate. And when everybody's gone in one direction, usually, it leads to a pretty bad ending because the timing is usually off. So I think we're coming into a scenario very similar that we could have a big unwinding event that takes a few years in stocks. And I think it actually could be very bullish for commodities. Obviously, if there's going to be selling in the stock market, there will be some downward pressure on commodities. But I do think we're coming into that scenario where the precious metals could have a very big move, just like we saw back in 2001, where gold put in a major bottom, the dollar put in a major top. The dollar is right back at those lofty levels where there's a lot of room for that dollar to fall, which just gives tons of leeway and headway for gold and silver and miners to rally going forward. So that's a big scenario that people need to pay attention to. And
I just want to touch on something you said real quick before we move on. You said that there was a lot of manipulation going on near the bull rally. You were talking about the NASDAQ. What were you referring to?
I'm just referring to the Fed just literally printing off money and creating plans to just drive the markets higher. To me, that's manipulation.
Okay. My question, two-part question. Do you think we'll reach that level? In other words, do you think the equity markets will continue to decline up to 50% down from its highs? And if so, why do you think this pattern will repeat that of 2001?
Yeah, I mean, I hope it doesn't go down there because it's not going to be the most exhilarating and fun experience for most people. But I think there is a very good chance it could go down there. And depending on how this market unfolds, just if we go sideways here for a little bit, it's going to create a bearish pattern that we'll be able to measure where that downside move is. And, usually you come back to a major support level. And when you look at this chart, I mean, right through the heart of this, I mean, maybe we don't go quite 50%. Maybe we come back down somewhere into the middle, but we're still talking a fairly significant decline from where we are. And I think there's just a lot of unwinding. There was a lot of printing, a lot of things put in place to drive this higher. It created a feeding frenzy of tens of millions of new traders and investors that just drove prices higher in 2020 and early 2021. And I think it's got overexhausted to the upside, and it's going to unwind. And from a technical standpoint, I mean, I see this coming back down in due time, and it could take a couple of years, but it could very easily come down here.
Chris, suppose we don't see further declines in the stock market. Suppose this is the bottom. Do you think at these current levels, the stock markets can still stagnate for 10 plus years? Now,
I don't feel like the market has actually shaken everybody to their core yet. We're not even close. I mean, people are starting to get nervous. I'm seeing financial advisors right now posting on their blogs saying, listen, we're getting active. You're going to see some trading. We're rebalancing. A lot of this just happened last week and the week before, but I think investors are really starting to panic because the 60-40, the average portfolio, or the retiree who owns a lot more bonds, are just getting annihilated. And they hit that breaking point last week. Bonds really went into a waterfall sell-off, and everyone's just panicking out of bonds and dumping them. And that leads us into a point where everything is oversold on a short-term basis. It's also seasonality, perfect timing for the market to find a bottom, because everybody just literally freaked out last week and dumped stocks and more so bonds. And now they look like they're ready for like that Santa, holiday rally.
Yeah.